Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives after they put out important news. With us today, Neil Sweeney, CEO of Reklaim, Myid, MYID in Canada, MyIDF, MYIDF in the US. Listen to these numbers because you're going to understand Reklaim. Facebook, $5 billion. DD Global, $1.2 billion. Amazon, $877 million. Instagram, $400. Meta 390, WhatsApp 266, Google 170, TikTok, Apple 8 and 16. What are those? These are just some of the fines levied against global platforms for breaching consumer data privacy rules as the global data industry enters into a major paradigm shift towards protecting data, and it's not coming back. Why? Because for years, consumer data has been amalgamated and sold our data without our knowledge. This is where Reklaim comes in. They've got the solution, and they've essentially created the Spotify personal data. What they're doing is creating a fair trade market where we decide, consumers, and profit on how our data is used. So, for example, Britney Spears, Kanye West, the rest of them, every artist gets paid for use of their music every time it's streamed on Spotify. Well, now consumers should and now do have the same right to be paid every time their data is streamed, used by big companies. So Reklaim is doing this right now. They've got a user-friendly platform that makes it easy for us to upload and manage our data, set our own prices, and receive payments direct to our bank account, all while making sure strict protocols are in place to ensure it's private and secure. And more than just lip service, because a lot of companies are talking the talk, they just announced record revenues for the year with 135% growth. For the full year, they've got a 2.36 million from just over $1 million last year. Q4 is up 58% to a record. These are all records to just under $720,000. Gross margin is exploding. We're going to talk about that. And record revenue, recurring revenue, now is 86% compared to 73% last year. Some of their customers include Microsoft, T-Mobile, HP, Hasbro, Amtrak, you name it. Neil, congratulations. Welcome back, my friend.
Thanks, George. I always like when you get started there, I always think there should be like some sound effect or music playing in the background. It's like
dramatic, cue the dramatic Hollywood, or stream some music from Spotify, get those guys paid to make the point even more so. How happy are you with these results? Big picture first. How happy are you with these results, and how happy should shareholders be?
Well, I'm never happy, so let's just put that on the table.
That's true.
I mean, that's just not my sort of personality. I'm happy with the direction that we're going in. Anybody that's been in the small cap market in 2022 can kind of feel the pain associated with that. Like, look, that's a tough year. That's a really tough year for a lot of companies. We're not excluded from that. And I think, primarily the last 9 months of 2022, we really doubled down on kind of trying to push this company, towards profitability, with the idea there being that, we were talking to guys like yourself and writing in our MDA that, we thought that the market was going to get soft. And that, for us as a company, like we didn't want to be a high growth company that was burning a bunch of cash. We wanted to accelerate towards profitability. And so, we made a lot of strides and took a lot of steps to kind of get to that. And I mean, some of them are pretty painful for sure, but I think like the trajectory is showing, you made reference to the revenue, the margin, et cetera. I think what I'm most happy about is most of the time when people start to streamline costs, they tend to lose momentum on the top line. We've managed to continue momentum on the top line while massively removing costs on the bottom line. So you have this compounding of margin, which is manifesting on the P&L. That's the part I'm happy about, is growing the top line while simultaneously stripping out redundant costs to grow margin. And we've done that, quarter over quarter over quarter. And the reality is that it's only going to get better from here, because of some of the things that we were contracted to do in 2022. We are now no longer contracted to do in 2023, and so we expect that margin accretion to continue to compound here and going forward for sure.
Neil, I love the fact that your revenues are up 135% and you're setting records, top line, margin, and you're like, I'm never happy, but if I have to find a couple things I'm happy about, it's these. Anybody watching or listening to this should really pay attention to that, because it means you are almost insatiable and there's more to come. Let me ask you, without putting you, I know you can't make projections, but Q4, 700, ballpark 720,000. I extrapolate that. That's 2.9 million without accounting for any growth. And you guys are obviously growing. Can we expect another record year in 2023?
Yes, period. Like, for sure. I mean, I think, again, I've been doing this for a while. I mean, the intention here is not to grow this business like 25%. The intention of this business is to grow this business as big and as fast as possible. Now, there's a throttle on that where we can only handle so much growth, but we go into every year thinking, how are we doubling revenue? Like that's the starting point. Doesn't mean that we're always going to necessarily be successful, but at this stage, you should be. And I would say that, the law of large numbers will suggest it gets harder and harder to double revenue as you get bigger. But, I'm not interested in running a business that, does $2.1 million in top line revenue. Like, no offense, but I'm not. Like, that's not, like, it's not. Like,
I love it, man.
And I appreciate that everybody wants this thing to be 10 million or 20 million overnight. The possibility here is not $2.1 million. The possibility here is not doubling 2022 revenue. That's not what is interesting to me. What's interesting to me is you have 7 billion consumers on the planet today, all of which that have a data profile. Nobody is being compensated. Nobody has transparency. Nobody has control. You're dealing with somewhere between a 500 billion to $1 trillion market with no consumer inclusion.
Jesus.
That's what's interesting to me. So, I think I've had some success in building businesses and selling them. The smart person kind of takes their money and goes home. The reason I'm involved in this business is because of the upside, not because of the $2.1 million in 2022 revenue or the potential to grow at 100%. Like, that's nice, but if the end game here was we hope to grow it, that we're going to be satisfied growing revenue 100% in 2023, like, we're kind of missing the mark. It's the 7 billion consumers on the planet with no access. And as you mentioned before, like, our plan is to build basically a consumer royalty for everybody on the planet to allow them to be compensated if and when their data is used. We get that right, we won't ever be talking about $2.1 million in top line revenue.
So let's dive into that for a second, because I want to make sure people understand that. There was a time when streaming came along and people thought, I buy my music from iTunes and I buy my music from traditional places. What's streaming, right? It's not a really big business. It's not going to be a big business. And, hence now we have Spotify, and that's the only business. That's the only game in town. You're building the Spotify for consumer data. So instead of, Justin Bieber or Michael Jackson or whatever, it's George Cholas, right? Essentially on a platform. And if somebody wants my data, they use it, I got to get paid for that, because that's essentially what you're setting up. Is it, or do you foresee a time? I mean, and how long will it take when we're all Spotifying, quote unquote, our data, and we're all just making money from our data, and we're splitting it with Reklaim, because you're obviously the broker who's bringing this together the way Spotify is bringing together artists and consumers?
Well, so a couple things. You should own Reklaim as a stock because you believe that that's the direction the world is going in. When people say, why should I own the stock? You don't own the stock because of the $2.1 million in revenue. You own the stock because you believe that the world of data is changing and that the world of data is not going to be the way it was in the past. And if you sort of step back from what's happening in the market, it's all around you. The narrative around TikTok in the United States, that's all about privacy. If you look at antitrust around Google and Facebook, it's all around data and privacy. If you look at all the new state regulations, which are now in the enforcement period in the United States, it's all around privacy. So there's this drumbeat or tailwind, which is actually creating, change in the market. I appreciate that I'm biased here, but like, it's so obvious. And if
It's all, no, I gotta tell you, if it wasn't, I would say, come on, Neil. You're hoping that everyone's gonna grow ostrich eggs and you want to be the main provider of ostriches. And I would call you out on it. But the fact of the matter is, there's no doubt about it. It's like it's a lock.
I spend a lot of, if you read the, our MD&A for like Q4, like I spent a lot of time sort of outlining like step by step specifically as to like what's been happening. So like, look, this privacy genie is definitely sort of out of the bottle. I think that my personal belief is that, we operate in a market today where we as consumers send data out, right? So think of like Neil sends data to Facebook, to TikTok, to Google, to Amazon. The narrative amongst those individual companies is that once you do that, that data is then theirs. You lose all right and title associated to that data the moment that you do that. Does anybody think that that is copacetic? Like the answer is no. So the only way you can change the world of data is you must invert it. So rather than Neil sending data out to Amazon, Google, Facebook, the Wall Street Journal, it needs to invert, where those companies come to Neil to query and ask for permission to use the data. It's the inversion that we are basically doing. We're literally turning the market on its head. And you can do that. The reality is that if you maintain the consent at the individual level and not at the thousands of individual company levels, you can change consent at one center hub and it will naturally update kind of everywhere else.
And that's where you come in.
That's where we come in. And so
You're the center hub.
We're the center hub. And I think the issue that you have in the data market today, and just to be candid, nothing will change. You have all these issues regarding data breaches and security. And like the problem with that is because you're literally sending data out to thousands and thousands of individual firms, creating inherently like security holes. So you're playing whack-a-mole. You'll never be able to change that unless you invert the way in which data is used. So, the intention with Reklaim is, one, you need a destination that consumers can identify with, that they can rally around. That's why we have the brand of Reklaim, which speaks to this idea of reclaim you from them. Then you have to have a redemption rail so that, if you at Georgecom decide to actually use Neil's data, that Neil can be compensated. Don't lose sight of this. We've been around 3 or 4 years. We've never missed a payment. Like that's a promise that we've made to consumers where every week you are getting a consistent dividend associated to your data. Now, you might not like the number or you might want it bigger. I get that. But point to me to any company in the world that has created a dividend, a royalty for, all these individual consumers every single week for like.
And you got to start somewhere. Yeah. Right? The first streamers on Spotify weren't making a ton of money on day one.
So I think what we've done here is we've built the infrastructure to allow this to happen. Now, doesn't mean that there's not iterations to it, but if just the fact that we have a payment rail, that we have a destination, that we're providing transparency, those are things that nobody else in the world is doing. Like we're the only platform that's providing consumers with transparency on their data that's in the market. We're the only platform that kind of is, that is consumer facing. We're the only platform that is actually, paying users every week, week in, week out. That is a promise that we've never tripped on. I tell everybody, like, you don't have to invest in Reklaim or believe in Reklaim, but I would encourage you to look around the public or private market, find somebody further ahead than us. I don't think you're going to find somebody. And that's not me being arrogant. That's just me saying like, look, I've been doing this for a while. This is hard. It's really hard. But like, if you believe in this space and you can find another company that is doing this better than us, you should invest in them. I don't think you will, but that's just, obviously unbiased.
I love that confidence. And by the way, it's not just Neil and Reklaim trying to invert the flow. You've also got government legislation that's basically forcing companies to reevaluate. I read off all the fines at the top of this interview, right? So this isn't just you saying, hey, Google, Meta, Amazon, you're gonna have to do it my way. And they say, get the hell out of here, Neil. We're gonna do it the way we always have. It's the government legislation that's pushing the market towards you, right? Even if it's hard and the companies don't want to go, they're getting pushed there. So how big of a help is that to your wins at your back?
It's a privacy relay race. It's the best way to think about it. The person that's running kind of that initial leg of that 4x100 here is the government. So the European government ran the first leg of the race. They handed the baton to the state level government in the United States, who in turn handed the baton to Apple and Google, who changed, functions in their actual products to eliminate the amount of data that's floating out of their products, who've in turn handed it to the consumer, who's gained kind of more awareness around what's actually been happening with their data historically and what's happening now. And now the consumer is handing it to a bunch of class action attorneys in various different states who are going to sue the hell out of like all these companies that basically have this data. So that's the relay race that's taking place today. The best way to think about it is Europe is running the first leg of that race. They hand the baton to the state level privacy regulators in the United States, who in turn then hand the baton to the OEM manufacturers like Apple and Google, who in turn then hand the baton to the consumers because the consumers are now alerted more to like how their data is being used, who in turn then the consumer hands that actual baton to lawyers specifically in the class action world, and around we go. So, I think the important thing to understand is that all this stuff is happening. The European laws are restricting data use. The United States laws are restricting data use. Here you're in the enforcement period in 2023, where 2 states are in the enforcement period, and you're going to have 3 more come online. In total, those 5 states represent over 100 million people.
So all the big ones, California, right? It's the big. It's not Wyoming. It's where most of the transactions take place.
It's the big ones, and so So I think what's happening is that as a consequence of this, of this privacy legislation, then you have it's really accelerated by the changes that Apple's made. So obviously Apple created advanced ad tracking, which obviously impacted literally every company that was using data coming out of an Apple device. We've talked about this before, but Facebook took a $10 billion write-down associated to that, as did every other applications. But I think what's kind of lost in that is that Apple's also introduced private relay, which obfuscates your email address when you're using it. They've also introduced connect or log in with Apple, which does the same thing. Slowly but surely, what Apple is doing is Apple's entire strategy internally right now is to really differentiate specifically on privacy, not on design, not on processing power, on privacy. And so when one of the world's largest companies doubles down on privacy, you should take notice. Google's doing the exact same thing. They're doing it for different reasons, but Google has historically supplied data to a market, to other companies, to allow those individual companies to really compete with them. That's over. Google is slowly but surely turning off the tap or the oxygen in the room, starving all those other companies of the data that they've used to compete products to build.
They've actually stated it that they're doing it. They've actually stated that they're phasing it in.
And in a lot of ways, what's funny is that, Google is increasingly getting more aggressive on privacy than even Apple. And so, what's happening with both Apple and Google is these are the 2 companies that have supplied more data to the market than any other companies. And both of them are basically moving to a zero emission model. No emission, no data emission from these.
Like, that's a good way of looking at it.
So what happens to, the thousands of companies who've historically relied on this data in the past? Or the brands who've used this data. These brands have to find new partners that can provide compliant data that has scale. I think Reklaim is that solution. So this world of privacy and data rights is accelerating, and it's consistently accelerating from 21 to 22, 22 to 23, and that's our opportunity. Our opportunity is to participate really in that acceleration.
Devil's advocate. Obviously, you're one of the smartest guys in the room, but like any competitive business, you're not, or you're probably not going to be the only smartest guy in the room. So what's competition look like today? And B, you've already said competition may be coming or may be there, but it's incredibly difficult to do the way you guys have already proven you can do it. So talk to us a little bit about the competitive landscape, because it behooves us to at least mention what's going on competition wise.
Well, we've had lots of competitors since we started this business, and every one of them has died. We're the only one that's managed to basically get over the wall. So there will be companies that come in and out of the market. If those companies, have the stamina and the discipline and the knowledge to stick with us, good for them. But we've been doing this for a while, and companies have tried to basically keep up with us in this space, and every single one of them is basically expired. So look, there's competition in the market. I mean, we're not naive to believe that we're gonna, we're gonna like be the only guy in the space. Like Facebook's not the only social network, and Uber has Lyft, so there's plenty of room here. I think our solution is that we've learned a lot since we started, and I think we've learned a lot from doing things wrong too. So when I see new companies come into the space, they're often literally making mistakes that we made 3 years ago, and so I kind of like, well, I know how that's going to work out. So this is a very difficult space. You're literally trying to take a $500 billion market that's international, that's kind of data's all over the place, and like you're trying to put it back in a box. It's really hard. And if you can figure that out, from a product and from an engineering point of view, then how are you going to scale and how are you going to sell it? So for us, we're working with Fortune 500 brands. I've worked with these brands for 20 years. I believe that we kind of have the credibility with these brands. These companies have supported me in all my different businesses. So, as we continue to return, Fortune 500 brands and expand brands into new verticals, as privacy legislation continues to inflect, and then we can potentially take these brands into new markets. I mean, there's a lot of runway here for us to grow the business. So I think it's a fool's game to focus on competition. I mean, it just usually means that you're insecure in what you're doing. We focus on what we're doing. And I think the intention is that I'm not interested in the competition. I think the competition is probably more interested in us. And so our plan is, look, we're going to press play on this gas pedal. We're going to go as fast as possible. And if you can keep up with us, good for you.
Neil, you may be the most confident small cap CEO assassin I've ever had on Agoracom. Man, I love it. I love it. And by the way, that's a lot different for you and for everybody watching, listening, from being a promoter who's got the optimism. George says, I'm going to be the greatest widget company in the world. That's not you. You're just an assassin. I love it. Last point I want to make is, we touched on it. I think it's important because sometimes people margin, they don't really focus on it. But in this environment right now where crypto exchanges are failing, Silicon Valley Bank almost took out half the Silicon Valley tech startups, money's harder to come by, risk is off. The biggest problem in the small cap world is George.com widgets just did $2.3 million in revenue, but I lost $1 million a year doing it, which is the typical growth story, right? Typically the growth story is, I'm going to try and reduce my expenses, but for now I'm just growing like a bat. But that doesn't wash anymore right now.
That's
small
over.
cap investors, risk off, are concerned about, is George.com going to be alive? Your margins way up and you bring your losses way down. Do you expect to be, without making projections, hitting profitability this year, next couple of quarters? Ballpark, how do you see that?
Yeah, that's the plan. So just to kind of riff on what you were saying. So again, I think we're a year ahead of everybody else as it relates to kind of making the moves around the economy and the capital markets. If you literally go back to like last year's MD&A, I literally talk about, okay, 2022, we're going to start to strip out costs. Like I literally said that. I'm like, we've got scale. Now we're going to start to like drive margin here. At the end of Q1, I basically said, we're accelerating this because we're not confident that the market is going to go in the direction that we want to go in. So that sounds eerily familiar to kind of like what we're hearing in the market today. So, I mean, I think we were, I say this all the time, is that, the smaller the company, the sooner you feel the impact of like the economy. Sorry, the smaller the company, the sooner you feel the impact of the economy. So like, you can almost like smell the gas. It's like, I don't like the direction this is going in. So for us, I think what we made a decision was, we want to be a high technology company, but we don't want to be a high technology company like burning, a ton of cash on the back end. We want to accelerate our way. We want to accelerate our way to profitability. And I think the last, few quarters is kind of demonstrating that. The question is really going to be, when can we show that first profitable quarter? That's the goal, right? So I think everything that we did in 22 was to kind of get us into a position where we can show that first profitable quarter. I think that's the new normal. I think, for people to come back into small cap, they've got to have visibility that you're on that path.
Yeah.
They've got to have it because they have a lot of choice as to what they want to invest in. And so
yeah, they're going to stay away from George Comp because they're going to say, I love that business, but they're losing $1 million a year. I just can't take a chance that they go bankrupt tomorrow because they can't raise money. And you're not going to be in that. You're not looking like you're going to be in that position.
Nothing, I think like we don't want to have this dependence on the market, for the existence of this business. Like that just isn't the direction that we want to go in. It's all about kind of driving profitability. I think that creates a new narrative. I think that puts a new floor underneath this stock. And I think it's from there that you kind of go up. If you look at what we've done over the past number of quarters, track the margin is what I would tell you as an investor. I'm like, track the margin. The margin gets better and better and better and better. Like literally go back over the last 4 quarters in 2022 and track the margin, and then do your own analysis as to where you think that's going to net out in Q1. Whatever you come up with is low. It's low. That's going to be lower than where we're going to end up. Like so.
And I'm just going to give some people some data at home because not everyone's going to be able to do that. But gross margin from Q3 to Q4 grew 59%. So you went from 16% 16% margin to 26% gross margin. That's a pretty big move in 1 quarter, man.
Yeah.
And it's static with that in a year. Forget about the quarter.
And that's the direction, again, like you can't get to profitability unless you're growing the gross margin. Like that's just basic econ, right? So like, I think for us is that's been our path. So you're starting to basically see that. So, our plan is to continue to grow top line. Our plan is to continue to grow margin. Here's another thing that, people always fixate on. You can focus on the top line. Top line's ego. At the end of the day, it really comes down to the profitability. Is that you can grow all the top line, but if you're burning tens of millions of dollars on the back end, who cares? Like there's technically no floor under your stock. In this market, there's no capital, right? Like there's capital. I'm exaggerating. Like there's capital, but the cost of capital is extraordinary. And I think what you've seen with like what you mentioned before with crypto, the economy, inflation, and now with like SVB and others, this isn't a public market thing. This is a public and private market thing. Like these VCs are looking at their portfolios and culling the bottom 20%. Those companies are going to get starved out.
Yeah, so they're going to say you're cut off. George Calm, buddy, we love you, but we're cutting you off because you're not going to be profitable for 3 years, and we can't afford it.
So I think for us, what we don't want to be is, the company hat in hand, kind of running around, like, always sort of looking for capital on a quarter by quarter basis. Like, first of all, that's inherently inefficient. It's super noisy, and like, it doesn't really scale. So, there'll be times in the future that maybe we raise capital, but I think our goal is nothing would please me more if I never had to raise capital again, to be honest, because like it saves me, I'm the guy that's got to raise it. So it's like, it takes me away from actually running this business, and I'm best served being on the business, driving sales, driving product. I mean, clearly I can raise money, but like, I would rather work on the product and driving the top line. So if I can create profitability underneath this business, we definitely reduce the noise in this business. And then, I think it gives people direction and confidence that, look, I'm tracking this company quarter over quarter. They're getting better and better and better and better. And now, surprise, like, now they're profitable. That's our goal. Our goal is to try to get that to the investor to say, like, we're now profitable, whether it's $5 or 500 grand, I don't know. But like the first step is getting to that. Is that going to be in Q1 or Q2? I don't know. But like, that's my focus right now.
Yeah, we're not looking for you to have a Google bottom line. I think the small cap world, the sooner you just get over that hump, even if it's $5, you're over the hump of George Calm bleeding cash, and you're no longer the bleeding cash. And that, in my personal opinion, no financial advice to anybody at home, so don't take it as that. But that's a massive bubble to get over there, because it eliminates a ton of risk and suddenly gives you a big differentiator over companies that that might have 2 or 3 times your revenue, but they're bleeding cash. So Neil, congratulations, man. Amazing year, amazing quarter. And Q1's probably, your Q1 was done March 31st. So I'm assuming by May 15th-ish, if not earlier, you'll have your Q1 out and we'll be able to get another peak there. But in the meantime, congratulations to you, man.
30 days to Q1.
30, all right. Yeah, so I think they allow 45, don't they? But you're going to do it in 30, you're saying?
Yeah, the intention is I'm again, it takes us time to close it. Like Q4 always takes the longest. So I've been chomping at the bit to get this out, mainly because me looking backwards is not something I like to do. I'm kind of a go forward type of guy. So I'm like, can we get done with like the number that feels like it was like nine years ago and get on to like where we are? Like,
yeah, it's April 5th or 6th right now. We're talking about the numbers as of December 31st, and you want to show us the numbers as of March 31st. So
yes, because those aren't really, again, like a quarter here is dog years, right? So like a quarter, like what we did last quarter, that's like feels like dog years. What we've done in the last quarter, that's more representative of where we are. What we're doing in this quarter, like obviously the closer you get to the present is more representative of what's actually happening. But again, we have the same. This is the challenge of the public markets and having the audited financial statement. But anyway, it's done. It's cool. It's out. I'm looking forward to getting the Q1 number out.
can't wait to have you back, man. Cannot wait to have you back. But for now, we're celebrating record revenue for the year, record revenue Q4, record margin, all of it right across the board. You kicked ass, and have a beer on us this long weekend, and then we'll be back at it when the Q1 comes out, my friend.
Yeah, no problem. Okay, George. Thanks so much.
To everybody at home, you've been watching or you've been listening to my podcast on Spotify, Google, Apple, your favorite podcast platform. To Neil Sweeney, CEO at Reklaim, right above his shoulder there, MYID in Canada, MYIDF. You can see that all around the screen as well. To start your due diligence, get to the company's profile page on Agoracom, because this is a very new business. Not everybody understands what this is. So we got it there in layman's terms, and then head over to the Reklaim site, do your deep dive due diligence. Just don't say 12 months from now, we didn't tell you so. Thanks for joining us. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.